Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for August 14th, 2026. Ron Quaranta here with my amazing friend and co-host, David Brill. Joshua Ashley Klayman is either on assignment or the Gulf Stream's just hitting the tarmac, David. We don't know yet, but hopefully she'll join us in a little bit. For everyone in the audience on LinkedIn Live and YouTube and X, thank you so much for joining us. If you've got questions for David or I, please put them in the respective chat function. We'll be happy to address them as well. And our usual disclaimer is obviously nothing we're discussing is any sort of investment or legal advice. And the things David and Josh and I talk about really are our personal opinions, not necessarily the opinions of our respective organizations. David, summer's beginning to wind down. I'm starting to see back to school ads on TV, and we still don't have a market structure bill. What's going on, buddy?
Well, as a lot of people probably know, the SEC canceled its regulation crypto meeting, which was scheduled to happen at 10 a.m. today. And no new date has been set. And the agency cited an unforeseen scheduling issue. So here's where the industry stands now. Bitcoin slipping below 63,000 as oil is over $82 a barrel and Treasury yields climb. The Clarity Act missed the August recess and is waiting on a September 15th procedural vote. And the SEC's first major crypto rulemaking was announced Monday, celebrated all week, and then canceled Thursday night with no explanation and no rescheduled date. And Congress is on vacation. So we're going to spend today answering one question. Who gets the crypto clarity first? Congress, the SEC, or nobody?
David, it's an interesting point, and I remember, the WSBA Telegram channel with members and the Slack channels with members. I made the mistake of supposing that perhaps they're going to wait until September 15th to find out where that vote does or doesn't land. And I got a good amount of backlash from some folks telling me I didn't essentially know what I was talking about, which is fine. And then we see the news, the hearsay news that's printed in some of the trade press that noted that it looks like it might possibly be, I don't want to use the phrase White House pressure, David, but passing reg crypto by the SEC might be difficult for negotiations about clarity. I don't think that's potentially out of the realm of possibility. Do you see it the same way?
I think there are three possibilities. One is there is a genuine logistical problem that will be resolved quickly. It happens, it's the summer. Two, there's an internal agreement at the commission about the specific proposal language that needs more time to resolve. Or three, there is external pressure from Congress, like you said, from the White House or from industry, asking the SEC to hold off. I don't think anybody really knows publicly which one it is, but it's not positive because, as a lot of people know, the practical consequences that Commissioner Pierce leaves in November and public comment periods run 2 to 3 months. So if this meeting is not rescheduled in September, the person who built most of the regulation crypto framework may leave before the framework gets proposed.
Yeah.
And, that's a significant risk for the entire project, for the industry's hope that the SEC fills the vacuum Congress left.
David, I'm with you on that. I mean, but Commissioner Peirce leaving in this November is a very different thing than if Commissioner Peirce had left 3 years ago. Like there's sort of more support within the SEC, it seems, for the work that she's done than there was in the previous administration. Should we still be that concerned if she departs before there's reg crypto?
I don't know how concerned we should be, but you have the person who is the champion of a number of these frameworks who are leaving.
Yeah.
So it's always great to have the person who sort of developed it and championed it leading. But look, I still think the SEC will fill in the gap with the CFTC if we don't get crypto regulation from Congress.
Yeah.
But I have to say, according to Galaxy and Polymarket, the odds are not good. Galaxy cut its odds for clarity becoming law from 50 to 30%.
Yeah.
Polymarket's right now around 17%, which was down from 48%. So, we'll call them the smart money, but we'll say that the smart money is betting against it, which isn't good for us.
Yeah, David, it's a really good point. I will remain the hopeful optimist, but that window is truly closing. And in fairness, I had a conversation with a colleague yesterday, and the joke was we've been saying the window's closing for the past year. It will be interesting to see what happens. David, I want to rip up the script if I could. There have been leaks. I don't want to say leaks. There have been rumors about what Reg Crypto might propose and put out there. We've been talking about innovation exemption for a while. What do you think is the outcome of token offerings for capital raises that don't require a registration? Like, what would that look like in your mind? And would that be a benefit for the industry, or does it like bring ICO boom times back in a negative way?
Well, I would imagine there would be a framework where there'd be some types of, standardized disclosures. It would be in a sandbox. There'd be limits on how much you could raise. So it's not something that would take away from like the stock market. It would be, I think a limited amount of resources or cash that they could raise.
Mhm.
I think it's creating an ecosystem where a company could go to market, in an ICO sort of format, but it's just sort of like regulation light.
Yeah.
But I am pretty sure that if this is a regime that would be put into effect, that it would be monitored very closely. And
Sure.
I think the SEC would have very little patience for projects that are skating the line or are not real or sort of vaporware projects.
Yeah, I think the days of an ICO with a PowerPoint raising 20 million and then disappearing are long over.
Unfortunately, there's still some projects that are disappearing, that start and sort of disappearing fairly quickly.
Mhm.
I think that leads into that revenue issue that we keep talking about. You know,
Right.
how are you valuing these projects? And
Mhm.
people are not just buying tokens thinking they're going to get a 3x. It's not happening. A lot of times when these go to market, they go down quite a bit.
Mhm. Yep.
So I think I am pretty confident that it'll be well thought out and done in a way that will, protect investors and people will be careful if they're going to utilize these exemptions because especially the first batch will be fairly well scrutinized.
Yeah. And David, we've full disclosure for the audience, we've met with the SEC Crypto Task Force. We've met with colleagues there. We're not a lobbying organization. They've got a pretty deep and broad knowledge of crypto and platforms and blockchain and how those ecosystems work. So they'll be able to delineate with a pretty fine tooth comb, in my opinion.
Yeah, I totally agree. And look, I think that I'm sure this has been well thought out and gotten a lot of opinions from folks, and has had a lot of people come into their offices like we did and have conversations. So I feel pretty confident that a new regime. There's also a comment period, so I think a lot of people have a chance to weigh in before it's
Yeah.
the final regulations come out.
David, speaking of weighing in, we were texting and messaging with some members this week. David, correct me if you disagree. I am still shocked at the level of pushback from some professionals in different verticals saying things like crypto should have no part in anyone's investment portfolio. Crypto should never be allowed to be part of 401ks. It's backed by nothing. And David, I shared with you by text message, I think it was yesterday, a public comment out there. I forgot who wrote it. It's basically just a spreadsheet. Are you surprised at this level of lack of understanding at this point?
Look, I think people who have formed a view on it just don't care to really deep down deeper on it and just like, this is my view, and they're sort of intractable. And you can give them all the facts you want, and they're just not going to believe it. I
Yeah.
actually think I don't have an issue with it being in 401ks.
Mhm.
Look, I think people should have access to products and should be able to make their own choices.
Yeah.
I think more the issue is that I don't think that the wealth managers right now in the non-401 accounts are really, adding Bitcoin to their strategies for their clients. So even though we have these products, I think 18 months later, they're still not really deeply being, integrated into different offerings for clients unless they're asked for. Like on an unsolicited basis, I
Right.
think there's a lot fewer people who have crypto in their accounts.
And that surprises me. I would have expected more solicited activity in the space, particularly given some of the ETFs that are out there.
Yeah, I would too, but I think there are a lot of people, I think it could also be a demographic thing.
Yeah.
If you have older wealth managers and they're sort of like not sure about crypto and, they have longstanding clients, they may be more circumspect about adding it to their client's portfolio.
Yeah.
Whereas if they had somebody, a client in their like 30s or 40s, sort of grown up in tech, those people will ask for it. And then I think, suggesting an ETF's not a hard reach on that.
Yeah, and that substantiates the commentary you and I and Josh have made for a long time now, which is this is also a generational conversation.
Yeah, and look, unfortunately, Bitcoin has not performed well this year against other equities and other assets. So, if you're a wealth advisor and you're looking, well, what's the last year's performance or year to date and last year's performance? Not great. So,
and why would they tell clients to allocate to Bitcoin by way of example when they could put it into NVIDIA or a chip ETF or an AI ETF and get double-digit returns?
look, we've talked about it before, but the AI and the chips and the different parts of the AI ecosystem, like they're really interesting, and we've seen huge gains. And I think what's different than the previous like Nasdaq boom is that these companies have real meaningful earnings.
Yes.
And growing earnings. And so I think that you look at like Micron and SanDisk, they're like printing money. I think Micron's gonna have like $300 billion in free cash flow. I know we're not giving stock advice, but that is like exceptional.
David, I was thinking about that because you and I have had this conversation about, and I'm hearkening back to your equity analyst days.
Yeah.
And it really puts to bed also the conversation, and I've had this with family members, like, oh, this is just like the IPO boom in the early 2000s. And I keep saying they had no revenue, no profits, they had eyeballs. And that's a very different dynamic today.
So people hate when you say this time will be different. Yeah. But I will say this time is different because like you said, some of the earnings are astronomical and the margins and also the barrier to entry. It's hard to build these factories. I think there's one being built that's taking like 3 years to be built in Arizona. And it's so hard to build these things that, you can't just suddenly ramp on. So
right.
If you have like escalating demand, hard, big barriers to entry and limited supply, you're printing money.
I'm with you, David. But that being said, when we look at the CapEx of some of these companies, hundreds of billions or trillion, for build out for data centers. I mean, the multiples are not crazy, but it does presume a pretty robust hockey stick level of growth in the next 5 to 10 years in compute.
So yes and no. Like yes, okay. It's true, but I think a lot of them have already been funded. It's just so a lot of them have been funded and will be using that money in the next couple of years. I think it's further out than that. How far out does it go? Because I think a consortium just raised like $500 billion. I think for NVIDIA, I could be wrong on that, but they raised $500 million to fund, expansion. So, and look, Oracle's like sort of made a bet the company play on expanding, and I think $200 billion. So there's a lot of money that has to be put to work. I guess the question is, like you said, later on. Where does that go? But all I have to say is this, like, if we think we're using a lot of memory now, if we start getting like humanoid robots and things like that, they're going to need 10x the memory that we're using now. So I think it's just something that we need to do as a country to just keep us competitive.
Yeah, and when you look at something, and you've brought this up, and I'm actually doing a webinar next week with Renato Mariotti from Paul Hastings, actually, on agentic commerce and agentic AI. I mean, there's legal implications in all of this, but they will consume vast amounts of compute and processing. They will also be transacting together, which I'm trying to tie together crypto and blockchain and AI and agentic commerce. You could envisage using stablecoins to do that, for example, or using crypto in some way to do that as well.
Yeah. I mean, this is where it's really interesting because I think stable coins are really easy to use for that. Yeah. But I do think crypto is natively like another perfect way for agentic commerce to be taking place and for entities to be trading with each other, using crypto. The question is it easier for companies to use, stable coins, or will it be easier for companies to use crypto?
Yeah, you said stablecoins, and Amber just popped up behind you, ready to weigh in on the conversation.
Well, I think Amber got excited when she heard about Tether's audit.
Go for it.
We should talk about that. And so Tether completed an audit with KPMG, which got an unqualified opinion, and it has backed all of their holdings. And I think they have a $6 to $7 billion surplus.
Yeah.
So I think that a lot of people who've been, the haters or the fudders on Tether, I think now there's a very clear picture that there is more than enough money behind USDT. I
Yeah.
think that's a good thing for the industry too, regardless of what you think of Tether. Like I'm favorable of like strong stablecoin products in our country. So if they're another product that's backed and it's had audits, I think that's just good for the economy.
David, I'm with you, but I do want to throw one wrinkle in there, and I might have misread the news this morning. I did see the unqualified audit, but I don't think it was made fully public. Am I remembering that correctly?
I mean, I don't know. I didn't see a full transcript. I just saw it reported in multiple places, but I don't think those aren't the kind of things that everything is just, usually those are like more private documents that aren't
Yeah.
shared with the world. So, I think the most important thing is what's, they've been able to verify.
Yeah.
If they have things that they, need to improve on, I don't think that'll be shared with the world because they're going to want to implement those things.
Fair. And is it, if I recall correctly, it might still be true that they're one of the largest buyers of U.S. Treasuries in the market today?
Yeah, I mean, and I think like if you look at like our financial policy, clearly stablecoin purchasers are buying a lot of our treasuries.
Yes.
And so it's really beneficial to our economy that we have these US dollar-based stablecoins.
Yep.
So I also wonder, like dovetailing it into Clarity, like I also wonder, I mean, now that we have Genius, I just wonder if it makes sense to be pushing back on Clarity when, under Genius, stablecoin issuers are going to have a lot more latitude to pay rewards than they would under Clarity.
I file that completely under it's the politics that is driving the Clarity conversation, because if it were well considered thought about the ramifications of doing Clarity or not doing Clarity, there'd be more votes already there. This is about the politics of it, in my opinion.
I think we're a little unlucky that this is an election year. I feel like if this was last year and there wasn't midterm elections, I feel like, well, we wouldn't have like the date sort of, restrictions that we have now. But B, I think it would have passed. I think if this was last year, I think we would have gotten a consensus and got something passed.
Yeah, I agree with you 100%. And, shout out to Adam Goldberg and so many of our colleagues that we've had these political conversations. Whatever your place on the political spectrum, Clarity and the debate about it is just another quiver in the arrow, in the arrow in the quiver, rather, of anyone in politics who's looking for the PAC money and looking for the votes, pro or con. I mean, it's not an accident that, your favorite senator put out a couple of requests from the SEC about, investigating certain token offerings, for example. The timing of that is not suspicious. It's directly tied to the election.
And also, unfortunately, a number of senators, made comments, and it's probably their staff who's writing these comments that aren't accurate.
Right.
And a number of very smart people on X have fact checked these comments too. So I'm a little surprised, I think, that the sort of ferocity of the anti-crypto forces that are protesting this. And I mean the ones that don't have a stake in it. Like, fine, like maybe community banks think this impacts them in some way and they're entitled to their opinion. But like, you have people coming out of the woodwork, senators and others who it's fine if they don't want to vote for it. Obviously, it's their prerogative. But to be like coming out so against it. And I think the last thing is the whole thing with the ethics and misunderstanding by a lot of people that this bill has ethics provisions. What we have right now is really next to nothing. Yeah. So this would be additive, and it really just undercuts our arguments. And it's just been disappointing that there's been a lot of sort of fake news put out there.
Yeah, and look, we've been talking about the fake news for a long time, and it also is really reflective of the sad state of, again, I don't mean to make this political, folks, apologies, of Congress when it becomes a matter of we want what we want, says XYZ representatives who are against crypto, or there'll be nothing, which doesn't protect anybody, doesn't give market structure to anyone.
Yeah. I mean, look, this is really important. I mean, if you look at like other countries, look, even Russia now has like a crypto regime, in place, and credit to them to coming up with a regime that they think fits their, country. But
yep.
we have to get something done. And, obviously we have different paths, and I'm hopeful clarity gets passed, but if not, I'm favorable on the two commissions
Yeah.
to passing a regime and putting it in place.
And to be clear for everyone in the audience, David, I think I can speak for you when we say we're not supportive of the Russian crypto asset regulation. We're just talking about the U.S. We think it's important.
Yeah, well, look, it's instructive. Europe has, the EU has MiCA, London, England has their own set of rules. Asia, different Asian countries have rules. So it's time for us to have more comprehensive rules.
Yeah. David, could I pivot back to something you had mentioned a bit earlier? We were talking about AI, and it's becoming more and more part of the day-to-day dialogue around crypto and blockchain, the mission of WSBA, the work you and I do. Long ago, you brought up, and I fully agreed with you, the problem of the user experience, the UX in crypto. When we look at, we talked about cold card and the kind of the hack there, which of course got played up as Bitcoin's been, hacked, and obviously it's not safe. I'm wondering if we're at a point where we just don't need a better UX for human users because AI is the user experience for crypto.
I mean, I still think we do need a better UI, because if you want to store crypto on your own, you still have these difficult UIs to use. And
Yeah.
then you have, like, I think, what was it? The other day now, Trezor was hacked for, customer addresses and personal and PII, like they had 17,000. So it's really complicated, but I do believe self-storage is important.
Yeah.
I do believe not your keys, not your coins, but we just have to find a better way to do it. And we just have to be much more diligent. And I think, Ron, we talked about this, the three of us, but people who are rolling out, whether it is products or protocols, like they really need to AI test these protocols.
Yeah.
And I think not doing that is a big disservice to their customers and to potential users.
Yeah, David, I agree with you. I guess the other side of that conversation that I struggle, like you and I and so many of our colleagues that might be watching this, we know about cold storage. We've known about it for a long, long time. We know how to do it. It might be really frustrating, but for the average user, telling them to look at their cold storage provider and reach out and make sure that the firmware is updated and AI tested, no one can do that. So I'm just struggling with what's the PSA for some of this. I mean, I'm sure you do as well. I get the emails every day. Update your XYZ cold storage. Well, and of course, they're all spam. Like every spammer on the planet is using this as an opportunity. But what's the average retail person supposed to do?
Look, it's really difficult. I mean, I hate to say it, but I think a lot of the average retail users are going to be like, this cold storage stuff's too complicated. I'm just going to buy the ETF. And if anything happens, it's in my, brokerage or in my retirement or wherever it is.
And I'm covered by SIPC.
And I'm covered by SIPC. And, whoever the sponsor is going to make sure nothing happens to it.
Yeah. It'll be interesting to see how that plays out. And again, I don't want this to be a public service announcement, but people, please be careful. I mean, David, I don't know if you agree. I've seen so many emails from colleagues about trying to get access to their cold storage. It's frightening how quickly spammers can evolve to reach out to people like that.
Look, we've joked about it before. I got so frustrated with my ledger a few years ago. I took all the crypto off it and I took my Timberland boot to it because it became exasperating to use. Now, ideally the UI UX has gotten better, but I remember just being so frustrated by that. And you and I have been in the industry a really long time. So I can imagine industry participants and non-techies would just be totally flustered by it.
Yeah. David, let me ask this last question about that topic. We brought up, well, it's not surprising they're moving to the ETFs, and good for them. Honestly, I think the ETF is a good vehicle for a lot of investors in this space. But why not move it to a Schwab? Why not move it to a Robinhood? Why not move it to a Coinbase? I mean, you've got to imagine that's a viable alternative for retail users.
Absolutely, but then you just run the centralized exchange risk. But I think that's a smaller risk. But look, I mean, the big centralized exchanges still have a lot of issues. It's not that they've gotten hacked, but there's so many fake things that sometimes the interactions lead to a hack, where people get emails and phone calls, and I must get there are times I get a few in a week or a few in a day.
Yep.
And unfortunately, some of the major crypto exchanges have like been hacked for PII, and so you get this. So, I think that the centralized exchanges are a better option, but you still have that risk.
Yeah, it's not just the brute force attacks against cold storage wallets, it's the social engineering attacks against centralized exchanges. The one other wrinkle I'll add to that, David, is, and I haven't looked in a while, but they're not subject to CIPIC protections either, though.
Yeah, and that's a problem. I think that's a problem for some people who are used to that and are come from the TradFi world. So I think that's why, the ETF wrapper is more attractive to them. For all of us, it would be better if people could be using native crypto and it'd be easy. And I think it is easy to use it, but it is becoming increasingly challenging to self-store it.
Yeah, that's a fair point. David, we'll come to macro events in a bit because I think they're an important part of the conversation. I couldn't help myself. I have to ask, David, what's happening to the alts?
I think we need to get a defibrillator. Look, it's the same sort of things where I think until money rotates into Bitcoin and Ether and we start seeing gains there,
Yeah.
it's an earnings story. And I think and we've said this many, many times, these projects are getting more robust. There are more things that they can do. They're better projects than they were years ago.
Mhm.
But, what measures can we use to value them? And they're not, generating a lot of revenue. And the ones that are doing well, look, Hyperliquid's generating a lot of revenue. It's doing well.
Yeah.
A few of the other protocols. So I think that's still the issue. But I do think that once, and we'll talk about price a little bit, once we do go on an upswing, there'll be a bit of FOMO, and I think money will go back into some of the bigger alts.
Yeah, and again, you've made that point. The bigger alts, or the alts, certainly with viable use cases, and you've always put forward the thesis that examine the use case, not the alts. And there's no shortage of alts out there who just have no use case at all.
Yeah, and look, the days of seeing 50-80% gains are over.
Daily.
Daily. Yeah, daily are over. But I do think we will see a rotation, and we will see some FOMO as prices go up. And I don't think we're that far away from moving back up. But I still think we have one leg further to go down.
It's funny, David, as you're talking about it, when we joke about alts, not joking aside, I agree with you on the thesis. I'll look at some of the indices, the fear and greed indices that we see, the alt indices, and as I look at the altcoin season indice, it's at 51 of 100. 4 months ago, it was at 20. So you're beginning to see this slow rotation. And I do get the sense, we talked about this in the past week, that whales are beginning to accumulate in certain crypto as well. Do you get the sense that players in the space are preparing for a next wave up, though?
I do. Think some big folks who've been accumulating. And I think there's some folks who've also been, continue to sell here, because I think they also think there's another leg down.
Right.
So, I think it has been positive. We've seen a lot of inflows into ETFs. But again, the narrative is such that, people are putting money in AI and chips and other things that are moving. And, that's where the fast money is going.
Yeah.
But I do think there's a really interesting Bloomberg article that we saw that, I'd love for you to talk about a little bit.
Bless you. Remind me which one.
That was the one that it was what younger people are putting their money in.
Oh, yes. Okay.
And one of the things we saw that some of the people think that sports betting is part of a retirement plan.
Yeah, look, there's a contingent of people who thinks buying a lottery ticket's part of a retirement plan too. In fairness, which is a little scary.
Yeah, I think it's a lot scary. I think sports betting is really fun, and I think people, it's great that people have access to it, but as a retirement plan.
Yeah, don't go all in on prediction markets and sports betting. All respect to FanDuel and all of the others.
But I do think that we need some catalysts, and I think Clarity could be a catalyst, for the crypto markets. Yeah. But we need a catalyst, and until we get a catalyst, and looking at the charts, it just looks like we're headed down another leg.
So to that point, David, I could see a leg down for BTC, and you and I watch BTC frequently, down to the 50s range, even low 50s. I don't see a leg down to 20, for example.
No, I think people would come in and buy in the 50s. I mean, there would have to be some really dramatic situation
Yeah.
that would take it down below the 50s. I think there are a lot of people who want to buy there and have orders kind of around that area.
I mean, strategy alone would dive in all the way down to 20, 30.
I mean, I think they would, but also I think that they have their own sort of buy and sell issues.
Yeah, we've spoken about that off camera a while. We've spoken about it with so many colleagues. And if you've got questions or comments, please post them. David and I would be happy to address them. I think it's a complicated financial flywheel at strategy that I don't think, David, a lot of people understand.
Yeah.
And I think they are being truly beaten up about needing to sell Bitcoin, which is a lesson for everyone. Don't promise you're never going to sell Bitcoin.
Yeah. I mean, look, I think the other thing we need to be mindful of is if we got another leg down and go into the 50s, are we going to see more forced selling from these Bitcoin treasury companies or miners to fund their operations or to stay afloat? Not the miners so much as the treasury companies. So I think that's the other thing, that there could be one final flush and that we see some of these other treasury companies selling to.
So, David, to that point then, are debts still alive? Are the debts still around? Strategy aside.
I mean, there are a few still around. I think Tom Lee's, vehicle is still around, and I think it's approaching 10 billion in losses. So, let's hope there's a turnaround for his sake.
Yeah.
But they are still around. I don't think it's necessarily a bad idea, but I think once people can buy these tokens in their crypto accounts or maybe in their brokers that are now offering crypto, I think there'll be less interest in those DAC companies unless they're like buying the crypto, staking it, and getting rewards from it.
Yeah.
Then that becomes a more interesting product.
Yeah, it's a fair point, David. It also makes me wonder, is one of the catalysts that you're alluding to, and we've got to flip the page and talk about tokenization, and we got to talk about, I often joke with our colleagues, TradFi is eating crypto and blockchain, and we're seeing so much more engagement in the space, and every bank's issuing a stable token. Every major brokerage firm is using blockchain, and we're beginning to look at the platform plays around, again, not investment advice, Solana, Cardano, ETH. Is the catalyst for some of those going to be Wall Street has built so much on top of these L1s that the tokens are good long-term investments?
I mean, ideally, the revenues should, continue to grow and
Sure.
they, get real revenue. I mean, I guess the question is, do they use an existing blockchain or are they building their own? Because you're going to have your own private blockchains.
Yeah.
And so Canton Network came out of, one of these things. And so I think it's going to be really interesting to see. I mean, I would like to see real industrial use of more L1s, although I think Ether is, it's been serving it really well. I still am very bullish on Ethereum long term. I just see it being like a core part of the infrastructure. Whatever the financial services infrastructure looks like, I still think that ETH is a big part of that.
Yeah, and David, you and some of the audience probably know I don't want to say anti-ETH, but I wasn't leaning in on ETH as much as so many others were, on the premise that it wouldn't have the transactions capacity and throughput that some market participants would need. A, I think that's changing. B, it really discounts an entire segment of financial markets that doesn't necessarily need nanosecond execution. So I'm beginning to see a better use case in the longer term, given some of the development work that they're doing.
And also on a price basis, ETH is down 2/3 from its all-time high of around 5,000.
Yep.
Bitcoin's only down half. So, on a percentage basis, if we were to see a rally on a percentage basis, Ether may go up higher than Bitcoin on a percentage basis.
It's a fair point. And ETH's down almost 3% on the week. So
yeah,
depending on what person's value proposition is, you might look at that and start seeing a discount.
I mean, look, I think if we see Bitcoin in the low 50s and ETH around 1,500, 1,600, I think we'll see a lot of buyers coming in.
Yeah.
That's what I suspect. But again, we just
family
need,
office alone.
yeah, yeah, the Klayman.
Joking, Josh, if you're watching anywhere.
But the Brill family office. Look, I just think a lot of people will jump in that range, and I think that's a compelling range.
Yeah,
But
agreed.
we've been talking a lot about Bitcoin and the alts, but we haven't talked about the latest market details. So do you want to get into that a little bit, or do you want?
Yeah, let's lean in on macro stuff, David. And so this week, for everyone in the audience, we had CPI data and we had CPI on Wednesday, PPI on Thursday. David, CPI up only 0.1%. So inflation CPI stays at 3.4% annualized. The producer price index, which, for the audience, David, is what leads into ultimately consumer prices because it feeds through supply chain and it feeds through distribution channels and sourcing, came in 0.
Yeah.
When the consensus was 0.2% on the upside. David, the year over year on PPI is now down to 4.7%. Some of the median estimates were 5.5, and it's down from a year ago.
Yeah.
I don't see the inflation, we have to raise interest rates argument anymore. Politics aside about the Fed chair, do you agree with that?
I do. And I think, the real point is that all three reports point in the same direction. The economy is softening and so is inflation. So I think the Fed's impossible choice is getting a little less impossible.
Right.
So I think there's really an opportunity to not have to raise rates, because I don't think realistically there was going to be a chance that they were going to raise rates in September and October right before midterms.
Yeah.
I just did not see that as a possibility.
Good point.
Some people, obviously some people see it on an economic basis, but I think when you're tying in all the elements at play here, I just don't think that, that's likely that we would see one.
So David, let me ask you this question. Just when I look at a lot of the research outfits out there, when I look at a lot of the Wall Street firms, why are some of them still claiming they're anticipating 6 interest rate hikes between now and the end of next year? Like, what kind of huge inflation spike are they looking at that you and I are not seeing?
It's a good question. I think this conflict in the Middle East at some point will resolve, or there's going to be some sort of détente. Because I think, if you look at it, our economy can withstand this much longer than Iran's can. So I think at some point they're going to want to make some kind of deal, because otherwise they're going to be starved of their oil revenue, and there's a blockade on them.
Yeah. So
I think if you take the view that at some point in the near future this gets resolved, I don't see what the catalysts are for really high inflation. I mean, if anything, if we see more productivity because of AI, we might, that might come down to the bottom line, and it might cost, goods may not go up as much.
Yeah.
I think the question is, are they still serious about 2%?
Yeah, and you've been banging that drum for a while, and I agree with you. I just, in the sweep of history around interest rates in this country, 2% feels like an artificial termination rate based on the great financial crisis, essentially.
Yeah, I mean, I think the 2% made more sense when you had borrowing at like 25 basis points.
Right.
When you're borrowing at, I don't know, 450 or 700 basis points, if you're getting a mortgage, like a 6 3/4 mortgage.
Yeah.
I don't see how all the knock-on effects aren't going to lead to, more than 2%.
Yeah.
So I think that 6 hikes is, because we also have to refinance the debt, and we want lower interest rates to refinance the debt. So I think in the totality of things, it just seems very outside of the.
I agree with you, David. I want to come back to the oil thing, because you said, and you've noted, that's potentially once the conflict resolves in some way, we could look at downward pressure on oil prices. Shout out to the Bloomberg surveillance team. I heard it, I believe it was this morning, David, and I didn't realize it really is also a function of production. And again, whatever anyone's perspective on oil production and the environment, we get that. But the interview mentioned that the United States is essentially the world's largest petrostate. And I think we've got Josh. Hold on. Do we have Joshua?
We do.
Welcome back,
Hopefully
Josh.
We'll say better late than never.
We're always glad to have you, Josh. I was just making a point about oil and inflation, and let me just finish that real quickly, Josh, and we'll give you the floor. David, the interview was about the United States and oil production, the United States being the world's biggest petrostate. We produce solely in the United States 20% of the world's oil production, 30% of its liquid natural gas production. And I get it. There's complicated conversations, David, about the strategic reserve and all this, but is that downward pressure on commodity prices and oil prices because of that?
I mean, I think it has a lot to do with it. I mean, I wish we had more refining capacity because then we'd really be self-sufficient. But
that got brought up too.
no, I just think when we talk about oil, that as long as we stay in this sort of $82 range, I think we're okay. Like we'll see, energy, a little bit of deflation from where $100 is. I think if we start getting above that again, that's where I think we're gonna, have some trouble.
Yeah, I mean, Josh filling up the Bentley's got to it's got to be a little cheaper this week, Josh, than it was a couple of weeks ago.
I mean, it's getting better, but I still don't drive.
She has the only Uber Bentley that I know, David. Josh, welcome. It's good to see you. I want to start with one thing, Josh. I made a comment about Acapulco hair last week, and I got a little bit of hate messaging. So I just want to tell you, you always look good on camera. For anyone who's going to send me the hate mail that I did receive, Josh, what have you been up to?
Well, I'm at the office, so that's what I've been up to. But yeah, I mean, I'm watching things unfold as always. I think one thing that I've been asked about today is, and you guys might have already covered this actually, is the fact that the SEC was going to have a meeting today and it got canceled. I'm guessing from your faces that you already covered that. Okay.
We definitely covered it, but we'd love to hear your input because I think there's a lot of misinformation out there too about why it may or may not have been canceled.
I mean, so I must say, I don't have actual information, but my thoughts are this. I mean, it had seemed as though the SEC has kind of tried to be deferential in terms of releasing the innovation exemption and dealing with things like vertical integration and stuff like that, while the Clarity Act discussion's ongoing. Yeah. So I do wonder whether, I mean, I think we saw on X and otherwise that some people were expecting that the innovation exemption or certain other announcements would be imminent. And I think maybe it has something to do with pushing clarity to September. Mm-hmm. But yeah, I must say I was, for the benefit of those at home, I was not watching this till I joined. I had a meeting. So if this has already been covered exhaustively, my apologies for
No, not at all, Josh. I mean, it's good to hear your perspectives on it. And I think that aligns with what David and I were chatting about. And it's interesting, David, I kept saying September 15th, and it feels like 100 years from now. It's 4 weeks away.
So crazy.
It is crazy. But remember, September 15th is just like the start of it's like a procedural vote.
Yeah,
it's really, it's really just the start of that process. I mean, look, I think we have a small window. And I do think, and this is a point that we made amongst the three of us, I think it is very important that there's a vote on the record for people to see who ended up supporting this bill or not. Yeah. And I think if it's not allowed to go to the floor for a full vote, I think that'll be doing, that will be doing us a disservice. Yeah. I think people really need to know where people stand. And I'm really hopeful that it passes cloture and that we do get a vote on the record.
I mean, to that point, David, they couldn't bring it to closure before the recess because a notable number of senators didn't want to be on the record for voting at all. I mean, again, the political perceptions are really driving the dialogue.
Yeah, but I think, look, I don't think it serves the American people that we don't have a vote on the record. Yeah. And and the idea that we have, it's a representative government. People want to see a vote on this. There's been a lot of time and effort expended, and people want to see where people actually vote when the bill is put up.
Yeah. He's such an idealist, Josh, that this is a representative government and the politicians will do the will of the people. I'm so impressed.
I'd say I'm a pragmatist, but I do think, like, look, these are basic concepts that we forget sometimes when we're
Yeah.
talking about all the things we do. And look, I think I'm repeating myself again, but this is something that's important that it gets to the floor and gets a vote.
Yep. Josh,
Absolutely.
agreed?
No, I agree 100%. And I think you guys actually shared with me a link to some sort of post showing, I guess someone had published it saying, hey, here's the people whom you should consider
Yes.
supporting. Where was that?
I'm gonna look for it while
I
we're
think it was on
but
X, David, that you
It
shared.
was on X, and I thought it was interesting because they pointed out who were supporters and who weren't, who haven't been supporters. I'm going to take a look while we talk.
And there were some faces, and then there were a lot of organizations under.
Yes.
So I think, yeah, once we source that for everyone. Yeah. Okay. So I just found where you sent it. It is a post by Tim Warren, and it says, it's called the Clarity Act Enemies, or Enemies of the Clarity Act.
Ooh.
And yeah, it says, look hard at these names that you may have supported. Stop supporting them immediately.
To that point,
my words. That's what the post says. Yeah.
It was an interesting graphic, and Josh, David, it may be the only graphic I've seen in my life that had Senator Elizabeth Warren and JP Morgan CEO Jamie Dimon in the same image on the same side of the issue, and I'm not even sure how to metabolize that in my brain.
It was an interesting list.
It was indeed. David, Josh, we've only got a few minutes left, and I know, Josh, you joined late. I know you're busy, but I wanted to give you the floor a little bit. We started talking a bit earlier about how TradFi, and I joke about TradFi eating crypto and blockchain, but it's astounding to me how much work is being done by banks and securities firms and broadly Wall Street, Josh, in the tokenization and blockchain world. I've got to imagine your desk is piled high with client work about it.
Absolutely. Absolutely. It is taking over the world, one might say. Yeah. I would also say that, I mean, even in, yeah, I mean, obviously I can't go into detail with things,
sure.
But yeah, I think that this is something that is one of the top concerns out there. I mean, I've been asked to speak at Money 2020 Middle East in Riyadh, and the topic is on tokenization, right? Yeah. It's all over the world, and it is the TradFi convergence continues.
Josh, let me add one more thing to that real quickly, and I've had this conversation this week, and David, certainly want you to weigh in. Are you either concerned about the growth of kind of walled gardens within particular banks and ecosystems, because that just exponentially increases the cross-chain connectivity, for example, the interoperability between different ecosystems? Are you concerned about that, David?
I mean, ideally it would be broad-based, but you can see if there are only certain entities trading with certain partners, they're not going to want to be a public blockchain. They're going to want trades to be, within that walled garden. So there's some cases where it makes sense, and there are other cases where, it would be great if there was one or two general standards that people could use and that it wouldn't have to be walled off. But look, if you have 3 or 4 counterparties doing proprietary things with each other, they're going to want it walled off and not have other parties have access to it.
Yeah, and you can imagine PII, for example, you'd want that as walled off data. Josh, what are your perspectives on that?
I mean, I agree with David. I mean, I'd like to hear your concerns, Ron.
I mean, my concerns, given the worlds that we come from and coming out of Wall Street and fintech for a long time, is vast interoperability is always much more complicated than leveraging some level of standards. And the problem is standards take a long time to develop. Interoperability introduces multiple potential breaking points. So I'm just concerned is the wrong word. I'm interested to see how it evolves. David, Josh, that point, when every bank has their own blockchain-based capabilities. When every brokerage firm is able to trade stocks, for example, on blockchain, and how do they do or don't? And it also, David, impacts things like settlement, things like custody, things like clearing, things like transfer agents. It's what's the nexus that makes them all connect, leveraging blockchain is what I'm trying to get to the bottom of.
I mean, it feels like Canton.
We were talking about that a bit earlier.
Yeah. I mean, no investment advice or anything like that, but I mean, seems to be coming up more and more, right?
There's a lot of effort a lot of firms are leaning into leveraging and working with Canton. So again, not investment advice for anyone or everyone in the group. David, Josh, we've only got a couple of minutes, and then believe it or not, I've got to run to my 1 o'clock call. But David, at the beachfront compound, what are the plans for the weekend?
Well, I've been adding to GDP this week, buying things for my daughter to get her back to school. So tomorrow I'll have the pleasure of moving her in for her second year in college. So I'll be looking forward to that and some quality family time. But I have some reading to do. Like, there's so much to follow up on AI and quantum, so it'll keep me busy too.
Josh, at the Vineyard, what are you doing this weekend?
So this weekend, I have some volunteering that I have to do.
Is this mommy volunteering?
Not quasi, right? But I do have to, I have to do some volunteering. My kids wrap up camp today. It's their last day of day camp. So, preparing for lots of things. And then next week I'll be in Wyoming for the Wyoming Blockchain Symposium. And that should be pretty exciting.
Yeah.
Interestingly, to David's point about quantum, and I guess to Ron, your point about banking, the panel that I'm going to be moderating there is called Future-Proofing Finance, Digital Banking and Quantum Cybersecurity. So all these things are converging.
Josh is one of the few legal quantum experts that I know in the ecosystem. So Josh, I'm sure it's going to be a great panel. And again, for everyone in the audience, Josh will be attending going forward our AI and quantum working group. Josh, we move the time rather.
Thank you. I'm excited that it will no longer clash. I had a permanent clash before for everyone at home. What I would say though also is I caution the use of the word quantum legal expert. I feel like there is a lot to be learned by everyone. And so just as I used to say that about blockchain and blockchain legal experts, I feel like, thank you, Ron, for the compliment, but you're overselling me.
I have a metric for both of you over the past 12, 13 years now, which is, for a long time, it was how many people ask me, what does David or Josh think about X in the crypto space? Now it's, what does David or Josh think about AI or quantum? Almost daily, Josh. So you're as close to an expert as it gets to me, but I appreciate the commentary. Josh, David, we'll leave it there. I'm going to be working on our November 5th event in New York City, and shout out to Anand Sithian and our friends at Crowell, who will be hosting us on Thursday, November 5th. We will have pigs in the blanket and lots of cocktails and lots of really great conversations with colleagues in the ecosystem. For everyone in the audience, thank you so much for joining us. If we missed any questions you wanted to cover, hello, Khalid. It's good to see you. We're almost done. I hope you join us next week as well. If you've got additional questions, drop David and Josh and I a note, info@wsba.co. We will see you all next week. Thank you for joining us. Take care. Bye-bye.
Bye.
Yeah.